next thing that we want to talk about in this lesson, and this is extremely important, and most people might not know what this is. Long and short. What is the difference between being long a stock and short a stock? And what most people don't understand, especially who don't know a lot about day trading, there's two ways we can make money day trading. We can buy a stock, like most people know, and if that stock goes up, we make money. That's what most people know about. But if you don't know how to short a stock, you're taking away half of your opportunities. So what is being short a stock? When we short a stock, we're actually selling a stock that we don't own, and we profit when that stock goes down. So it's the exact opposite of being long a stock. Example, let's come back over to our board, and let me put Bank of America back up there for 1 second. Let's say in Bank of America, I put in a market order to buy this stock. I would now be long 100 shares of Bank of America at $23.63. Very simple. If Bank of America goes up higher than $23.63 and we sell it, we make money. Example, we buy 100 shares at $23.63. The stock goes up to $23.73 and we sell that stock. We have just made 10 cents on 100 shares or $10. That's what being long a stock is. We buy a stock, we are long, we need the stock to go up to make money. Here's the other side of the trade. And it's really not as complicated as people make it out to be. It's not. It's the same trade, it's just flipping it around. I'm looking at Bank of America and I'm going to short this stock. So I will sell 100 shares at $23.62. And now I profit on that if the stock goes down. So if I'm short 100 shares at $23.62, and this goes down to $23.52, and I now buy it back, I made $10 on the trade. So it's actually the same exact trade. One, we're buying a stock. If it goes up, we profit. Two, we're shorting a stock, and if it goes down, we profit. One of the hardest things to understand about trading, and it takes people a while to get this, and it's a little scary sometimes to be short, but it's the same exact trade. Trust me when I tell you, at least half of every trade we do is being short stocks. No difference. We buy a stock, we need it to go up to profit. We short a stock, we need it to go down to profit. So let's sum up the important things that we've learned in this lesson. Bid and offer. When we want to buy a stock, we put in a bid. When we want to sell a stock, we put out an offer. Probably the most important thing that we talked about in this lesson is your stop orders. When you get long a stock or you get short a stock, the first thing you're going to do is put in an order to limit your risk. That is called a stop order. Always put it in and never change it. When we buy a stock, we are long. When we sell a stock we don't own, we are short. Also extremely important. 3 things that we look for when we're trading stocks. We want volume. We want stocks to trade a minimum of 2 million shares per day. We want liquidity. We want the spread between the bid and the offer to be very close. And lastly, and most importantly, we want volatility. We need to have stocks that trade in $2, $3 ranges so we can get in there and find the exact spots where we're going to buy and sell it and make our trades for our 25 cents to 50 cents or $1. So let's move on to the next lesson.